In our December issue of Specialty Crop Grower magazine, I referenced an market intel that was written by Danny Munch, who is a economist for the American Farm Bureau Federation. And Danny's joining us right now to talk a little bit about the farm economy. The market intel that I referenced was about USA feeding programs and some of the ways that those programs can be improved. And always find his pieces, and they're called market intel, to be real helpful. And I encouraged in the article, the column, my upfront column, for people to go check out his work because I always find it insightful. So we're excited to have you join us here, Danny. This will be added to our digital version of the magazine. So this is just kind of a little enhanced coverage. So thanks for joining us.
Yeah, thanks for having me on. Always a busy day from Washington to come tell you about ag.
Excellent. Well, we wanted to kind of get a big picture because I know you're kind of plugged into all this. Let's start with the overall farm economy in the United States and kind of focusing in a little bit on the Southeast since that's what we cover. But just give us some big picture look at what the farm economy looks like.
Yeah, so really one of the main phrases that we've heard a lot from the ag media this year is a tale of two farm economies. And that's because we have sort of on the livestock side, our folks are tending to do better, high beef prices, and then boosting up substitutes like pork and poultry a bit, also helping dairies that are diversifying their operations with beef on dairy crosses. Those high beef prices really helping those markets. We've seen a little shifts and volatility in those prices as of late with, different rhetoric out of the administration with trade issues, but generally speaking, livestock producers tending to fare better. On the crop side of things, across both row and specialty crops, the opposite picture. We have production expenses that are remaining very sticky. We were actually supposed to get a USDA net farm income forecast today, but they announced today that they're canceling it and will release that data in February. So we don't have new data, but the latest data shows record production expenses for this year with things like labor, which makes up 40 to 50% of the cost for specialty crop producers, up 50% over the last 5 years. Interest expenses, marketing, transportation, all at record levels. And those are just biting into the ability for crop producers to make ends meet. We see vast losses per acre for our row crops, which are easier to track because we have better data. When you have one single price based off of CME, for instance, and then specialty crops, a lot of regionality, but massive losses depending on where you are and what you're growing. Some places better than others. Focusing more on the Southeast, obviously, you have sort of a shift towards leaning towards specialty crops, but also differences in what row crops you grow. Pecans on the specialty crop side as well, cotton on the row crop side, more heavy. Cotton losses, we expect in latest data about $370 an acre in losses, and then specialty crops run the gambit. So I know tomato producers, I saw some reports losing between $3,000 and $4,000 an acre. Strawberries, it really depended on where you were, but out in California, we're losing thousands and thousands of dollars an acre, and I'm not really sure what the latest on Florida is. And then citrus obviously remains very guarded. Obviously, when I was out there earlier this year, saw some positive outcomes on the science front towards citrus screening, but still a lot of uncertainty on the trade front, and whether or not, tariffs that have been lifted, tariffs that might be put in place, are going to further impact economies. One thing that I always like to bring home for people is that even if we have the product and even if we build a trade deal, it comes down on the reliability and consistency of our product's ability to move overseas. So when we talk about our port infrastructure, our transportation infrastructure, our competitiveness, and sort of the consistency in trade policy also matters a lot.
So it's a good segue to kind of dig a little bit deeper into this whole tariff thing. And, as an editor, I write about it and try to follow it fairly closely, but its stuff happens so rapidly and so quickly. It's really difficult to follow and fully understand the impact that it's having. Talk a little bit about how these tariffs have impacted specialty crop growers and what we might expect going forward.
Yeah, it's a really good question. And, this whole year, every single day has been a little different. So that uncertainty has just added so much uncertainty into the bottom line for our crop producers. On one end, you have on the production expense side that it makes, purchasing inputs for our farmers often more expensive. We've had periods of time this year where there have been tariffs on fertilizers coming to the country. Some have been lifted, some put back on, herbicides, pesticides. Tariffs on their equipment and parts that usually sort of were exempt. There's been differences in tariffs there. So contributing to higher production expenses that our farmers are facing. On the cash receipt side, it really depends what you're growing and where you're located, right? So for our folks, down in Florida, they were impacted by citrus tariffs early on this year from Canada, retaliatory tariffs. Those were lifted a few months ago, but still uncertainties in those markets. It's hard to have those buyers come back when they don't know if our administration might come back with something new in the next month and shift sort of the supply chain that those companies rely on. You have Chinese tariffs still, retaliatory tariffs still in place on things like tree nuts out in California and other specialty crops that they grow. So it really depends on where you're growing. And then you have the other side of the story, right? Where tariffs might be helping American products be a little bit more price competitive, or might just be pushing down some substitutes. So I just wrote a market intel on Christmas trees. Artificial Christmas trees becoming a major competitor for U.S. grown trees. We import about over $500 million in artificial Christmas trees last year. There's a modest tariff on Chinese artificial trees right now, and that might be causing some folks to shift to U.S. grown product. So you have that side of the equation as well, where you could have some benefits too. So it really depends who you are, where you're growing, but at the end of the day, it's uncertainty and not having a clear story for buyers and being able to rely on their supply chain.
I suspect too that this, from a farm lending side, on the banking side, this uncertainty certainly probably makes that process even more complicated.
Yeah, and that's a conversation that a lot of bankers are having with farmers right now. A lot of folks aren't going to receive. We had the One Big Beautiful Bill Act, which provided a lot of enhancements to the ag economy, especially for our row crop producers. But those benefits to things like crop insurance, to agricultural risk coverage, and price loss coverage aren't going to come into play until October of next year. So bankers really like to see that that money is going to be in play. We're talking about, perhaps bridge payments from the administration to help fill economic losses. Lenders want to see that that's actually coming before they offer up, operating lines of credit at certain rates, that sort of situation. So it's put a lot of our farmers in a very difficult place. We have the government shutdown, longest shutdown in history. That delayed things as well. So putting farmers in a hard place to be able to go into the new year with confidence in accessing lines of credit.
So, Danny, it's easy to get focused in on the negative things. Any bright spots in the economy, farm economy, we can look at, and any in particular for specialty crop?
Yeah, well, this year, in terms of regulatory changes, we probably had one of the biggest movements on the labor front in the positive direction that we've seen in a long time. So, Department of Labor put out a final rule on the adverse effect wage rate, or the minimum wage that producers are required to pay their visiting seasonal workforce through the H-2A program. We know that over the last 5 years, those costs for farmers have increased exponentially, and we're really out of touch with realities for specialty crop producers, especially folks having to pay for housing and transportation of their visiting workers, and that wasn't really included in any of the calculations to set the AWR. So this new methodology creates two skill levels: one for folks that for jobs that don't require a lot of skill, and then ones for folks that might require a little bit more skill. But the skill level one will encompass about 95% of workers, DOL projects. And, across states, each state has a slightly different one, but you see declines from the current AWR, upwards 30, 40, 50% in some cases. In some cases, the minimum wage in the state is now higher than the AWR, and that's what's going to become what farmers have to pay their workers. That's what becomes the prevalent wage. So that's really positive. They expect billions of dollars in savings on the labor front for our producers going into the next year. So that's a very positive movement on the balance sheet for our producers. We know a lot of it went into effect right away, but a lot of folks already have their contracts in place for the workers. So hopefully next year this will provide some movement. So that's something on the more positive front. We know we still have a few dairies down in the southeast. Whole milk for healthy kids passed the Senate. We're hoping for them to pass it in the House. That would allow whole milk back in schools and suck up some extra butterfat demand that we have out in the countryside and boost class one fluid milk prices as well. So there are some wins here and there that we're looking forward to, and helping out on the balance sheet for our producers.
Great. Is there anything else you'd like to add?
No, I think that's it. Thank you for having me on, Frank.
Absolutely. We appreciate you coming on, and let's tell folks if they want to look up some of your market intel. I think the Farm Bureau's web address is fb.org, right?
Yep, you can go on fb.org/market intel or just our main page and go over to the market intel section. And we have reports on, countless different subjects. We take more complex subjects on policy, on just ag markets, really anything, and boil them down into easier to understand articles and charts that y'all can use. It's completely free, and we use them to help educate the Hill as well about important agriculture issues to help tell farmers' stories. So definitely go check those out. You can put in your email, and get them in for free into your inbox whenever we post them.
Great. Well, it's a great resource for me as well. So we appreciate all the work you do, and thank you for joining us.
Yeah, thank you.